Okay, welcome to my YouTube channel, and today I'm going to take you through a Forex Trading Lesson One. It's typically theory, what you should understand before you start trading. So I want you to understand what is market. So today we are doing introduction to market. So let's begin. Before we start, we have a challenge in this YouTube channel that I want to see if I can manage to get 100 likes in this single video. Challenge is on. So before you begin, first click that thumbnail up opportunity and then click the subscription button. We go on. First, in this video, at the end of this video, you will be able to understand what is trading. You will understand what is Forex market. You will know what is equity market, commodity market, and also the derivative market. You will understand all them in this market. So before you start trading, you should understand what are you doing. So what is trading? Trading basically is about putting your money to work in order to achieve your personal goals. Unlike what many people think, successful traders don't rely on luck and chances. Before they trade, they plan. Successful trader plans. Successful traders research. Successful trader understand their investment. You are not there to lose money. You are there to make it's an investment. You are there to do business, and they understand how they fit with their financial goals. So you should evaluate yourself and know what exactly you want in this market. So if you're planning to trade, be well prepared being well prepared will improve your chances of success, will fundamentally improve your chances of success. So the origin of market, actually market started long before even we knew, but even before everything, like it started when the people, the ancestors, when they started putting painting. They used to paint curves. They used to paint on curve walls, and realized that in exchange of that paint, they could get paint. Of that painting, they could get paint. That's a trade. Since goods were first exchanged between people so many years ago, trade has been a great way of making profit. Like we have said above, like when they traded their painting to get paid, that's a profit. Today, people trade everything. Like literally, we can say they trade literally everything. Like they trade with money, they trade with the farmer trade with the crops, the livestock, everything. But you can never trade with your wife, trade your wife or husband, or maybe siblings. Forex trading is an exchange of currencies which happen in financial market. Financial market. We have mentioned financial market, the financial and forex trading exchange that happen in financial market. What is financial market? Financial market is a place where financial assets such as stocks, you can say such as stocks, bond, currencies, and commodities are traded. Why do people trade? Some people trade because they expect a gain. Like many trader like me, they expect a gain from their investment. Those kind of traders are called speculators. A speculator tries to anticipate price movement and trade to market to make a profit by buying low and selling high. You see, like so many people they are speculators, so many traders are speculators because they trade to gain. Other people trade to make their risk, to make their risk, to manage their risk. Like those, they are called hedgers. Hedgers, hedgers trader hedgers trade in order to protect what they already have. Like farmer, for instance, you can say, take for this example, a farmer who sells their crops before the harvest season. That farmer is trading to protect what he already have. You see, besides some people trade to save, manage risks, or to speculate. Some people trade because they find it challenging. This kind of trader, they trade because they find it's challenging to trade. There are those people who try everything that's challenging to them. Our financial market, our financial trading all over the world take place either through a regulated centralized exchange or over the counter, that is OTC. Let me indicate here. Or OTC. Exchange traded. Exchange traded market operate via centralized exchange such as NYSE, that is New York Stock Exchange. We have LSE, that is London Stock Exchange, and TSE, that is Tokyo Stock Exchange, and many more that you know in this world. Not world. I'm sorry, guys. This world, world. Uh, OTC, over-the-counter market, are decentralized market. This one you should understand. They are decentralized market made up of a network of different market dealers who compete to link buyers to sellers. Here in this market, dealers act as a market makers by coding prices which they will buy a security or currency. Like in OTC, the brokers, that is the market dealers, they code prices which they will buy a security or currency. Categories of financial market. Financial market are categorized based on security traded, such as Forex market, that is Forex exchange market, foreign exchange market, that is foreign. When you can buy that, this is where you can buy or sell currencies such as euros, dollars, maybe yens, those all, and many more that you can mention. Another category is based on equity or stock market. This is a market where you can buy or sell shares of a company like Apple, Amazon, Facebook, Starbucks, IBM, and so many others that you can think of. They are all categorized in equity or stock market. We have commodity market. This is where a trader buy or sell commodity like gold, oil, and so many more. Like those commodities, you see, those commodities that like the assets. We have the bond, the fixed income market. This is a market where you can lend money to the government. You see, a market where you can lend money to the government or corporation. It's called what? The bond or fixed income market. Why? Why are they called fixed income market? Because you get the fixed amount in return. Derivative market. This is where you can trade financial contract that obtain values from underlying asset. For example, we can say um, oil contract. An oil contract obtain value from an asset called oil. That is that asset is called underlying asset. So derivative market is where you can trade financial contract that obtain values from underlying assets. Next, forex market. A forex market is the market where currencies are exchanged or traded for one another. Like you have euro and you want USD. So for you to get USD, you must give your euro. So that situation, you are in a market, you are in a forex market. You are trading the foreign currencies. Uh, Forex market is the biggest market in the world with an average volume exceeding 5 trillions per day, operating 24 hours in 5 days a week. That is Monday to Friday. In Forex market is an OTCM, it is an over-the-counter market used by individual, government, financial institutions or businesses. Forex market, we can also say that forex transactions occur. Forex transaction, that's foreign exchange transaction, occurs because of what? Some people may ask you, why do we trade? Why do we trade with currencies? It's because of international trade. You see, like you are in US and you are selling things to Japan. Japan, they have their own currency, that is yen, and US they have dollars. So the reason for this kind of market, these transactions, is because to stabilize that thing, this one has this and this one has this, so that the thing can be complete. And you want to go back to Japan, and Japan operate with yen, you must have yens, and these people have come with USD. So you have taken the USD and then exchange the USD to your own currency. That's why forex transactions occur. Today, most currencies are freely floating, and their prices are determined based on demand and supply of each currency. Like, for example, you can get the demand of euro is high today. You can check those on Google, like it's high today, and maybe dollars is somehow low. You see, so the demand and supply determine the price of the currency, of that particular currency. Equity market. Equity market are places where shares or stocks are traded. For example, the London Stock Exchange, New York Stock Exchange. That's are called equity market. Shares are financial assets that provide evidence of ownership, like ownership in a company, and hence a share is the place where raw material, instead of a manufactured good, are traded. They are divided into three main sectors: agricultural commodity, such as grains, fruits, and fiber, like corn, soybeans, and cotton, and also livestock. Uh, livestock, meat, etc. are traded. Energy commodity, we have crude oils, Brent, oil, ethanol, and natural gas. Metal commodity, these are industrial metal like copper, lead, precious metals like gold and silver, and so on. Fine, let's continue. Fixed income and bond market. A fixed income or a bond market is a market where debt and securities are traded. This is a market where borrower with a shortage of cash meet with investors with a surplus of cash. The main issues are the government, semi-government institutes like municipality, corporations like IBM and so on. When you buy a bond, you are lending issues money, and they promise to pay you back in full. No, this is not issue. When you are buying bond, you are buying you are buying bond. You are lending issuers money, and they promise to pay you back in full plus the interest in future. That is what is basically called the bond market. The bond market typically involves the borrowing, like the borrowing and the lending. Good. Next is derivative market. Before you when you trade, you must understand what are derivative market. Derivative markets are basically instruments whose value depend on, or we can rather say, they are derived from the values of some other instrument called the underlying asset. E.g., for example, we can say an oil derivatives. And oil derivatives are derived from the value of oil market. This kind of a market, the derivative market, they are categorized or divided into two categories based on assets. They derive their value